So I was thinking about this question, and it's actually a tough one to answer. When you think back to what your best trade is, like, go, whoa, what does that mean? Does that mean your favorite trade? Does that mean the trade with the most nuance? Does it mean the trade that performed the best? And same thing on the other side, right? Well, when you think about the worst trades, like, does that mean your biggest loser ever? Does that mean the one that you mishandled? So the way that I'm going to answer this, and it's going to be the ones that I personally learned the most from, the winner that I learned the most from, and the loser that I learned the most from. So the winner that I learned the most from was actually a trade back in 2013. This was when I first started to use options instead of, or in place of stock. So it was early, in the days of Twitter. Well, when Twitter was a recent IPO and it started to emerge from a base pattern and it was getting ready to report earnings. And back then, that's when I was still trying to think through how can I play earnings. Like, I see the setup, it looks like it's setting up ahead of earnings. If it falls, then it would have been making it an all-time low at that time if it would have gapped down against me. But I thought that has potential to make a nice move higher. But if it does, then I would miss the entry because it would gap way above my entry. So how can I participate in this thing? So I was thinking through it. It's like, you know what? If I buy options, right? If I buy call options out of the money and buy them where the entry point would be, buy it at that strike price, and buy it at, because I had a longer term trajectory on this, I was planning to hold this as an intermediate term trade. So I bought the strike of the entry price, and I bought it, I think, a month and a half, maybe 2 months out. And I bought it with that risk in mind. So I was treating the bulk of the premium as my risk, but I also knew that if it did tank, I wouldn't be out the entire premium. Like, I would be out a lot of it, but not the entire thing. So I started to think through, and it was like, all right, I'll probably lose about half my premium if I use this option and it goes against me. So with that, it's like, all right, I could buy this amount of calls. I forget exactly the number of calls that I bought. Let's say it was 10 calls, right? So bought the 10 calls, and earnings is tomorrow. It's going to release earnings tomorrow. Gapped up. Fantastic. Plans working out well. So how are we going to manage this trade? Well, it is an intermediate term trade, so I treated it the same way that I would trade the stock. And I had plenty of time value on this thing in order to trade it in that way. And back then I already had the different types of sell rules that I have. Like, if you watch the moving averages video that I posted a little while back, you'll see how I use moving averages as a trailing stop, and how I also set backstops and take profits, all those kinds of things. So all those were a factor. And then when it finally started to break below, I trailed this thing with, I think, the 5 EMA at the time, and it finally broke below that exponential moving average. It was the first time that it did it. It was a slight change in character, but I wanted to lock in the gains. And yeah, well, with options, you can make gains very, very quickly. And on this particular trade, it was up maybe about 350% on the options. So that's a great return. So that was the best trade, and it led to how I can use options in my trading and how I can trade earnings with options. So great learning experience there. The worst loss that I had, and what I learned from this, was when I was getting married. I had this big trade on, in silver. All right, the ticker symbol is SLV. So if you go back and you look at silver, this is going back to 2011. If you check out the chart of SLV in around end of April, beginning of May, check out that chart. Like, it was in this parabolic move. I was in it. I thought that I was a genius, and I went on my honeymoon, and I didn't bother to set a stop loss. And I come back, and this thing tanked. I was up maybe about 70-80%, somewhere in that ballpark, and I come back to maybe 7-8% gain. That was a rough lesson to learn, but the lesson there was you better have those stop losses in, and you better make a going away plan for your trades if you are going to be away for any period of time, whatever that plan is going to be. Maybe you take a portion off, maybe you sell the whole thing, maybe you have somebody else managing it for you, maybe you set a series of stop losses, maybe you set a trailing stop that's based off of a moving average, a percentage, an average range, whatever it is, but you have something set in place, and you double check it and you triple check it to make sure that that is in, because the last thing you want to do is come back from your honeymoon and see that all of your profits are gone.